This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back to the program. Let's take a look at this week's auction numbers. There are 2,438 auctions scheduled to take place this week. That's up 8% on the same week last year. In Sydney, there will be 576 auctions. That's up 13% on last year. There will be another 144 auctions in regional New South Wales. Melbourne will host 1,149 auctions. That's up about 24%, and another 46 auctions in regional Victoria. Brisbane has 148 auctions scheduled. There are 138 in regional Queensland. Adelaide has 131 auctions, and there's 16 across the rest of South Australia. Canberra will also host 78 auctions. Let's take a look now at the most viewed properties going to auction this weekend. Topping the list is a 3-bedroom townhouse in the inner Melbourne suburb of Richmond. The address is 4 Little Alfred Street. It's got an asking price of about $1.1 million. Next, we have 37 Caroline Street, Hawthorn East, also in Melbourne. This 4-bedder has 3 bathrooms and is close to tram lines. The agents are hoping for about $2.7 million. And then it's another Melbourne property at 8 Malling Road, Canterbury. This 4-bedroom home has a price guide of up to $4.4 million. Also got 12 Dean Avenue, Hawthorn in Melbourne again. And this 5-bedder comes with a pool and 4 parking spaces. The agents hoping for about $6.5 million for that one. And rounding out the list is a Sydney home, a 4-bedder in Smithfield, which is on about 1,000 square metres, and there's no price guide given. But the very top listing of the week is 37 Portobello Road, Burpengary East. It is a 6-bedroom, 3-bathroom, 8-car spot retreat on over 3,000 square metres. It's got an outdoor swimming pool. You can see there it's 90 metres squared pool with dual water slides, a diving platform and a swim-up bar. And inside the house, you've got a single-level layout with a separate granny flat and a study. And for those cooler months, an electric fireplace. There's no price guide, but the suburb's median price is $825,000. Let's get more on the property market. This week, I'm joined by Angus, economist at REA Group. Angus, pleasure to have you on the show. Thanks for joining us today. I want to kick it off with the auction clearance rates and how it's tracking. It's always a good way to sort of get a barometer of how the property market's going at the moment, and it has picked up slightly. Can you talk us through that?
Yeah, absolutely. And thank you so much for having me, Ingrid. Great to be here. We've certainly seen auction clearance rates come up a bit over the past couple months. They obviously declined quite a lot from where they were earlier in the year when we were seeing very strong conditions around the country. That kind of declined through to the middle of the year as the RBA pretty quickly changed course for interest rates, and we saw sentiment in the market really change quite quickly. But over recent months, clearance rates have come back up a bit, and that's kind of consistent with what we're seeing in terms of some of our other metrics. So buy demand, again, it's off from where it was earlier in the year, but it's still stronger than it was in, say, 2019, and it certainly hasn't gotten weaker in the past few months.
Do you think it's helped that the RBA only moved by 25 basis points instead of 50 basis points? It seems like they may be on a path to moderating rates. Does that help the market?
I think buyers are certainly a lot more confident about the path of interest rates today than they were in sort of May, June this year when the RBA was pretty quickly changing tack and there was a lot of uncertainty about how quickly and how far they would raise interest rates. I think we're most of the way through that at least initial rise in interest rates, and so while it has been very brisk and it's had a big impact on buyers, I think buyers are at least a bit more comfortable about that trajectory and about where that leaves them in terms of borrowing capacity.
All right, we better talk the rental market because this is a hot topic at the moment, the difficulties in finding a rental. Just give us an idea, some colour on what's actually going on.
Yeah, it's certainly a hot topic, and it's a pretty hot market broadly too. We put out a report this week looking at the share of rentals that you can find for under $400 a week. Pre-pandemic, that was more than 2 in 5 rentals, so a bit over 40%. Today, it's fewer than 1 in 5, so it's halved. I think that gives you it's one way to look at how quickly rents are growing, basically right around the country. So, across the capital cities, we're seeing double-digit growth in many places over the past year in advertised rents. Across the combined capital cities in the past 3 months alone, advertised rents have grown more than 3%, which I think by any measure is brisk pace of growth. We're seeing growth in regional areas as well. It wasn't as brisk over the past 3 months, but over the past 12 months, we've certainly seen rents growing very quickly there as well.
So is it an investor's market? I mean, are we seeing more investors come into the market to take advantage of the yield?
Yeah, it's a great question. We are starting to see that, which is a bit of a reversal of what we were seeing during 2021 and to some extent 2020, when a lot of investors actually sold out of the market. Part of why markets are as tight as they are right now is that we saw a lot of investors leave. Rental markets at that point were actually pretty weak and prices were up, so many took the opportunity to take the gain and leave. That's starting to reverse now. We're starting to see more investors purchasing. The investor share of new lending is back up above a third, which is a bit more like its historical average. It was below a quarter during the pandemic, to give you a sense of just how out of the market investors really were. So that's starting to help. We're starting to see a bit of a rebuilding in the size of the rental stock, but it's going to take some time.
Angus Moore, appreciate your time. Thanks so much for joining us here on the program.
My pleasure. Thank you so much for having me.